Now, remember, we have to trade what is happening right now. And right now, equity markets continue to perform regardless if they're detached from the state of the economy or not. We're watching our downside. Our downside over here is going to be, right, if the S&P breaks this trend line where we peaked out in March as the lows, if we were to break the cycle that's been going on 12 years ever since the Fed last started QE, once we break this trend line at that point we should see a significant downside, whether it's a head and shoulders pattern playing out as it is possible right now on the monthly chart, or if it's a different pattern. Once the break of this trend line sets forth the next bear market, then we'll be in a bear market, but we're not in a bear market right now. And of course, we're cautious of the downside, but technically we are still looking quite bullish here. And don't forget, when I said the last time the Fed started QE, started this bull market, the Fed has just restarted QE. The Fed has just restarted QE as a result of this crisis. If you think that we're going to lose this trend line right away, that means central banking has failed and we have bigger problems on our hand. Either which way, if that were the case, that's exactly why we own gold and Bitcoin. I want to bring your attention over to gold, silver. Now, the gold-silver ratio recently hit new all-time highs during the liquidity crisis back in March, and since then, silver has really been outpacing gold. Let's take a look at the last time we were in a similar situation, and that was back in 2008. That was after 2008, in December of 2008, when they started QE, right? Let's take a look at where price was when they started QE. So the gold to silver ratio had also just peaked back in October of 2008 during the Lehman crisis. That's when actually gold, right, outperformed silver by a large margin. And then we had a couple of months later, it was when the Fed started QE, their first program purchase, and that sent all of a sudden, that was the high really of the gold to silver ratio, and silver went out to perform gold by a large ratio up until the bear market in precious metals start. And then since then, gold has been outperforming silver. And then you could see, I want to go to the spike right now. I want to go to the spike during the crisis. Here it is. Here's the spike. And do you remember how similar that looked back over here to this spike over here during the Lehman collapse? So it's a similar situation. Price is now, we're going to see also now that QE is starting. Now QE didn't start 2 months later. It started like a few weeks later, right? Back at the end of April. It was about a month later. That's when QE started this time. And then since we're seeing that ratio improve with silver outperforming gold, is that going to continue for the next 18 months or so? That is the question we need to be asking ourselves, because as we're getting ready here to invest in gold, is silver the better investment at these levels? Even though, of course, most of us have long-term positions in gold and are quite bullish on the metal going forward. Speaking of which, let's take a look at gold. And gold is trading right now today, right, testing the resistance, yearly 8-year highs up at 1760 today. And right now, gold has the opportunity, perhaps after consolidating now, to break out here to the upside and challenge 1800, or perhaps even go on to new all-time highs during the next leg up. We'll see where it leads. But right now, gold is looking very, very bullish. Right now, how do you get into this trade? Well, if you were looking to get into gold, you're not going to be buying right here at the resistance or on the breakout, right? We talked about positioning yourself in here towards the upper end of this range. But now, or down here towards the support, right? Those are two areas that you would look at to position long on gold. Right now, as we're getting ready for the breakout, you get to be looking to enjoy that. If we break out to the upside, right, we'll have an opportunity then to look for our first pullback and then see how we consolidate and come out of it. And that will be a possible long entry you could look at. Otherwise, we might very well be rejected here today towards this resistance, perhaps overnight. Let's see whether or not tomorrow this move up breaks out or is rejected, and then we'll take a look perhaps as we consolidate further. Nevertheless, gold looking very, very nice up here. Gold's continuing to test yearly and also 8-year highs. You could see the last time gold traded up there was back in October of 2012. So gold is looking very, very nice right now. We also want to take a look at Bitcoin with you. And you could see Bitcoin continues to consolidate, getting ready to take out the trend line, going back to all-time highs, as well as this 10,400 resistance. Once we break above there, the bull market will have begun on Bitcoin. We are getting close. People continue to wonder if now is a good time to accumulate Bitcoin. I personally, why I still have orders in at 85 and also at 82, and why I do not necessarily think they will get filled, why I maintain I do not think they'll get filled since the last fills, right? What I am looking to happen over here is for us to really start this breakout. I think now until the end of the year is a great time to accumulate Bitcoin. I think from now until the end of the year. And what does that mean? Why not just go all in on Bitcoin, right? Why not just go all in? You don't go all in on one asset. That's fortune favors the bold, but you also need to be pretty smart about your wits in order to obtain capital. So what we're looking at over here is Bitcoin's looking very good. We talked about we're getting ready here sometime soon for the break, for the bull market to start, and a test of 12,000. I think that is going to be the next move on Bitcoin. Before we get into the dollar, there is a great interview here on this podcast from Cambridge House International interviewing Lynn Alden, making the case for a weak dollar. She explains the debt bubble and the incoming inflation. She does a much better job explaining this current situation than I possibly could to you. So I'm just going to include this link for you in order to go ahead and watch this interview yourself. It's one that I highly recommend. Again, she'll do a better job explaining this than I could to you. So the best thing I could do is just point you towards the correct resource. All right, here's a look at the dollar, and we are seeing a couple of things happen. Let me zoom into the 8-hour time frame for you. I want you to first notice, as we did this morning, we noticed that this trend line was breaking. That was our signal that the dollar is resuming its weakness. We're seeing a downtrend after the breakdown of this channel over here. We're seeing the breakdown. We've come into resistance. It looked like we had the potential to actually break out over here of a reverse head and shoulders, touching up towards the 98.30 level, but we are being rejected. And if we lose this 97 support, then it looks like we're going to see perhaps even a test of the 96 area, or we have a little bit of support also at 96.45. Those are areas to watch right now. Dollar is definitely on its back foot as we're seeing the precious metals bid, and we're also seeing risk on in the equity markets. S&P 500 putting on another good session. It is making during New York its highs on the day after making highs during London session and then pulling back before New York opened. S&P continues to look very healthy. Again, we are very cautious of the state of the economy, and we're looking for things to break down. We're looking for when technically the S&P breaks down as a potential opportunity to go ahead and short as we perhaps come down and test the March lows. But none of that's happening right now. Everything looks quite bullish. This could continue for some time. Right now, think about continuing buying off of support. NASDAQ also looking excellent. NASDAQ actually looks like it is going to be perhaps this week going on to make new all-time highs now that Dow and the S&P continue to lag. They do continue to lag. You could see over here. Let me pull up the YM futures for you over here. You could see why the Nasdaq is back, looking to make new all-time highs perhaps this week, at least testing them right now. We're seeing the Dow right here making a lower high, and it is yet to even test or being close to test the high of its last swing high, while the Nasdaq is back already making that new high. S&P 500, similar situation to the Dow. It is lagging. Looks to be a little bit better. Technically, it looks like the S&P should be outperforming the Dow and the Nasdaq continuing to outperform the S&P. We are going to continue to look for opportunities to continue to position in over here until we have reason to believe that this is fading and or rolling over, and we should be looking at something to the downside. All right, everyone. That's it. I hope you have a wonderful day. Thanks for spending the time together. Look forward to reading your comments below, and I'll see you all tomorrow.